Assalamualaikum guys. So today, my group will present to you topic 7, which is how to finish the step cycle. Under this topic, my group will cover sale and process cycle. But before that, I would like to introduce to you guys my group mate first.
Hi, my name is Afidunin bin Sali.
Hi, my name is Muhammad Afiq bin Nur Azmi.
Hai, Assalamualaikum. My name is Muhammad Amar Izzat bin Zain Fazal.
Hi and Assalamualaikum to all students. My name is Muhammad Farid Imatil Boni.
My name is Muhammad Fahmi bin Muhammad Fazil.
Assalamualaikum. My name is Muhammad Firdaus bin Abdul Azhar.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Haji Akimi bin Muhammad Taufiq.
Hello, my name is Muhammad Irfan Iskandar bin Ramsam.
Hello, my name is Muhammad Ruzaini bin Mazlan.
Sales and collection cycle. What is sale? Sale is an exchange of money for goods, service, or other property. In accounting, net sales refer to the operating revenue earned by a company by selling their product or services. Maknanya, sales ataupun jualan ni merupakan suatu benda yang melibatkan pertukaran mata wang untuk mendapatkan sesuatu barang ataupun servis. Next is cycle. Cycle is a series of events that happen repeatedly in the same order. Senangnya nak kata cycle ni adalah benda yang berlaku berulang-ulang dengan susunan yang sama. Contohnya macam siang lepas tu malam kan. Dia mesti siang lepas tu malam. Dia tak ada siang-siang, dia tak ada malam-malam. As for sales and collection cycle, it is a set of process that begin when a customer purchases goods or services and ends when your business receives payment in full. As part of the year-end audit of your financial statements, external accountant will test your sales transaction and the internal controls over those transactions to ensure that your company is not materially misstating its revenue or account receivable. Dalam kata mudahnya, sales and collection cycle ni dia akan bermula bila ada customer yang beli barang dengan kita ataupun servis, dan dia akan berakhir bila kita dapat bayaran payment tu secara penuh. Dan lepas tu dekat at the end of the year end untuk bisnes kita tu, external accountant akan datang dan test kita punya sales transaction tu dan tengok dia sama tak dengan internal control untuk transaction tu dengan apa yang company kita patut buat. Tujuannya adalah untuk tengok ada tak penyelewengan ataupun penipuan yang berlaku dalam untung ataupun account receivable. So, in sales and collection cycle, there will be 5 steps or way to understand about the sales and collection cycle, which are understanding the internal control of structures, preliminary assessment of control risks, test control, review of preliminary assessment of control risks, and the last one is substantive tests. There are 4 things that can help us to understand about the internal control structure. The first one is overview of sales and collection cycle. The second one is sales and collection cycle activities. Third is documents and activities. And the fourth one is internal control objective and control procedure. In overview of accounts in the sale and collection cycle, we need to know about what is the type of sale that happen in the transaction. Usually, there are two types of sale, which are cash sale and also credit sale. So, what is the difference between cash sales and credit sales? Cash sale will not involve account receivable in the transaction. The cash will be collected when the sale is made and the goods or services have been delivered to the customer. While in credit sales, it will involve account receivable because the consideration for the sale will be settled on the later date. Usually, the seller will provide the buyer a credit period to pay the bills on the later date. Document involved in cash sales. In the beginning, when customer make an order to purchase goods from us, we will send a document called sales order to the buyer to verify about the details and confirmation of the purchase. After that, in the sales process, there will be a shipping document when we want to send the goods to the customers and also a receipt when the transaction is complete. There also will be a check if the customer pay using cash in bank instead of cash in hand. On the other hand, the same document will be involved in the credit sale. The only difference is that credit sale will have an additional document for their account receivable, where it will involve invoice, debit note, and also credit note. All these documents will only involve when there are a credit sales in the transaction. The second things that can help us to understand the internal control structure is by looking at the sales and collection cycle activities. Usually, there will be 6 steps in this cycle, starting from receiving the customer order, to granting the credit, to preparing sales order, then shipping the goods, after that billing to customer, and the last one is by recording and collecting the cash. All these activities need to be in the flow for any transaction for sales of goods or services and cannot be skipped because it maybe will be resulting to a misstatement in the transaction.
Now we're going to talk about the related documents of the cycle. It is divided into 2, which is sales and cash receipts. First off, we're going to dive into the sales. So let's get started, shall we? First, we have customer order. The customer order accepts and processes customer order. Secondly, there's the sales order. Its function is to prepare sales order and organizing customer information in a consistent format. Besides that, we have signed sales order. A signed sales order approves credit and authorizes the processing of transaction. Next, we have delivery or shipping document. It is the delivery and shipment of goods. Other than that, we have standard price list or sales invoice. Its function is billing the customer. Furthermore, there is a daily sales summary. It is to prepare a summary report of daily sales, both credit and cash sales. After that, we have sales journal transactions. The sales journal transaction is to journalize the sales. Moreover, there is also a credit note. A credit note approves returns and allowances. After that, we have sales returns and allowances. The sales returns and allowances records entries in this journal for journal returns and allowances if not accommodated in sales journal. Other than that, we have bad debts authorization form. This approves write-off of debtors as a bad debt. Next, we have the accounts receivable subsidiary ledger. It posts the sales transactions. And last but not least, the monthly statement. The monthly statement mails monthly statements to customers. Now that's all for the sales part of the documents. Now we move on to the cash receipts. Here we have remittance advices or pre-listing mail receipts. It receives payment by mail. Secondly, after that, we have cash register tapes. Its function is to collect collections from the cash sales. Next, we have daily cash count sheets. The daily cash count sheets cash counts and agrees cash on hand with register totals. Then there is also a daily sales summary. It is to prepare a summary report of daily sales, both credit and cash sales. Moving on, we have the deposit slip. It deposits cash in bank. On top of that, we have cash receipts journal. It records all cash receipts. And finally, bank reconciliation statement. Its function is agreeing bank balances recorded in the books with balances shown on bank statements. And there you have it. That's all for me. Thank you.
Today, I will be explaining about internal control objective. Firstly is authorization. Means that all transactions are approved by responsible personnel in accordance with specific or general authority before the transaction is recorded. Means that before the transaction is being recorded, the transaction needs to get approval from the authorities to ensure that internal control can run smoothly. Next is classification. All transactions are recorded in the proper account. Means that, for example, the purchase of raw material should not be posted to repair and maintenance. Instead, it should be posted to inventory account. Same thing goes to sales and revenue. It must be posted or recorded at appropriate account, which is sales account. Number 3 is completeness. No valid transaction have been omitted from the accounting records. Meaning to say that the assets, equity, and the liabilities are recorded and have been recognized in the financial statement. Other than that is cut off. Transactions are recorded in proper accounting period. For example, if goods are delivered prior to year end, they are included in the cost of goods sold, not inventory. In another word, now we are in year 2020, right? So meaning to say that all transactions that occurred or take place from 1st January 2020 until 31st December 2020 must be recorded at all. And last but not least is accuracy. All valid transactions fairly represent the economic events that occurred, are lawful in nature, and have been executed in accordance with management general authorization. This actually means that there have been no error while preparing documents or in posting transactions to ledger and have been accurately reflected within the financial statement at appropriate amount. For example, in auditing, we must follow all the rules and regulations that issued by ISA, that stand for International Standard on Auditing. They are responsible for issuing all the rules that must be followed by all auditors.
Traffic control order has 5 applicable associations, which are occurrence, completeness, accuracy, cut-off, and classification. It is about the occurrence. So, what does it mean by occurrence? Occurrence is the transactions and events that have been recorded have occurred and pertain to the entity. We should know that every sales record should be supported by proper documents such as sales order, customer purchase order, and shipping order. Also, there should be appropriate policies regarding approval of cash discount, credit terms, allowances, and bad debt write-off. Completeness. Completeness of all transactions and events occurred and pertain to the entity should have been recorded. All of these documents need to be recorded by renumbered and numerical sequences. As an example, the first sales order from a customer needs to be numbered as number 1. By using this method, it will be easier for employees to keep and trace all documents. The third one is accuracy. The meaning of accuracy is amounts and other data relating to recorded transactions and events have been recorded appropriately. Besides, there should be procedures for independent internal verification of invoice preparation or separation of duties to lessen the risk of miscalculation. Specifically, goods that ship need to be counted independently, while shipping documents are compared with sales order. It is the cut-off. Cut-off is transactions and events have been recorded in the correct period. All transactions need to be recorded as soon as the transaction happened. As an example, employees need to record the date when the company received the cash from sales. Lastly is the classification. All transactions and events should have been recorded in the proper accounts. As an example, all sales invoices should be coded by type of product, whether they are consumer products or industrial products or services. Also, employees should use a chart of account for a better classification.
Okay, now we talk about preliminary assessment of control risks. It is the process through which the accounting and internal control system effectiveness is evaluated with regard to the detecting and correcting the material misstatements. The auditor makes a preliminary assessment of control risks for the financial report assertion related to the cycle's transaction and accounts balance. Those are the tools of preliminary assessment, which is internal control questionnaire (ICQ), flowchart, and narrative on the internal control structures. Okay, now we go to the first tools of the preliminary assessment of control risks, which is the internal control questionnaire. An internal control questionnaire is a document which an auditor provides to employees of a company before performing an audit. The questionnaire is useful to determine which areas the audit should focus on. These are some of the questionnaire for sales received. Our customers' order reviewed for terms such as prices and quantities. Our pre-number sale order used. Are all credit sales approved by the credit department before shipping? Is the credit department independent of the sales department? Is there an approved customer list with credit rating and limits for approving credit? Are shipment checked against sale invoices for quantities, model, and etc.? Are pre-numbered bill of lading used? Are unused bill of lading safeguarded and checked periodically? Is the numerical sequence checked for missing periodically? Are sales invoice forms and credit memos pre-numbered? Are unused sale invoice safeguarded and checked periodically? Are sales invoices checked for arithmetical accuracy as to price, freight allowance, extensions and totals? Are all merchandise returns supported by pre-numbered documentation forms? Are all merchandise returns approved by a responsible officer? These are some of the questionnaire that can be distributed by the company to the sales department before performing an audit.
A preliminary assessment of control risks have three tools for the financial report section related to the cycles, transaction and account balance. So this is one of the tools, which is flowchart. This sales flowchart let you to create and display sales process map, workflow and anything else involving sales process management. The first one is customer placing and purchase order. The marketing department capture the essential detail on the purchase order form. The transaction is authorized by obtaining credit approval by the credit department. The purchase information is released to three departments, which is warehouse, invoicing department and shipping department. The marketing department will inquire stock position from the warehouse. It is to determine inventory available to fill the order. When there are no sufficient items on hand to fill the customer order, a back order is created. Once the item become available, a picking ticket is created. The picking ticket authorizes the inventory control function to release merchandise to the shipping department. The accuracy of inventory record is important because customer may become justifiably upset when unexpected delays occurs in their filling order. Next, warehouse department will respond to the marketing department to inform whether the item is available or not. If not available, marketing department will inquire production schedule to the factory to request the customer order. Factory will produce and send the item transfer to the warehouse while responding to the marketing department about the production process. Then the merchandise is picked up from the warehouse department and sent to the shipping department. The stock record are adjusted. The merchandise packing slip and bill of lading are prepared by shipping department and sent to the customer. Shipping department reconciles the merchandise received from the warehouse department with the sale information on the packing slip. Shipping information is sent to the invoicing department. Invoicing department will compile and reconcile the relevant fact and issue an invoice to the customer and update the sales journal. Information is transferred to the account receivable and inventory control. The packing slip lists the quantity and description of each item included in the shipment, while the bill of lading is a legal contract that defines responsibility for the goods in the transit. If the customer is to pay the shipping charges, the copy of the bill of lading may serve as a freight bill to indicate the amount the customer should pay to the carrier. One major decision that needs to be made when filling and shipping customer orders concerns the choice of delivery method. Another important decision concerns the location of distribution centers. After that, the customer will acknowledge the invoice and send to the warehouse. Then, the account department will demand the balance of payment from the customer. Account receivable record the information in the customer account in the account receivable subsidiary ledger. Inventory control adjusts the inventory subsidiary ledger. The invoicing department, account receivable, and inventory control submit summary information to the general ledger department, which then reconcile this data and post to the control account in the general ledger. In the billing process, billing will involve two separate but related tasks, which is invoicing. The document created in the billing process in the sales invoice, which notifies the customer of the amount to be paid and where to send the payment. And then the second one is updating account receivable. The account receivable function uses the information on the invoice to the debit customer account for the credit purchases and credit customer account when payment is received. Usually the customer is asked to return a copy of the invoice when mailing in their payment. This return copy is referred to as the remittance advice.
So secara ringkasnya untuk yang flowchart ni, mengikut kefahaman saya, customer dia akan order daripada marketing department. Dia akan letak purchase order, then marketing akan check dengan warehouse sama ada barang tu ada ke tak, then warehouse akan respon sama ada barang tu ada ke tak. Kalau tak ada, dia akan bagi tahu marketing yang dia tak ada, then marketing akan direct dengan kilang untuk dapatkan stok tersebut lah, untuk orang produce lah. Dan lepas tu factory akan dah siap barang tu, dia akan transfer terus kepada warehouse, dan dia akan respon dekat marketing yang barang tu dihantar dekat warehouse. Then marketing dia akan confirmkan balik purchase order tu dengan customer yang barang tu dah ada, so orang akan hantar je. Selepas tu warehouse akan bagi dekat shipping department barang tersebut untuk dihantar kepada customer. Sementara tu marketing department dia akan bagi 3 jenis dokumen, which is customer order yang tadi tu, lepas tu bill of lading dan juga shipping order kepada invoicing department, untuk invoicing department sediakan invoice. Then invoice tu dia akan bagi dekat accounting department satu, yang kedua dia akan bagi dekat marketing department. Lepas tu bila dah shipping department lepas tu dah shipping department hantar barang tu kepada customer, customer akan acknowledgekan invoice yang diorang buat tu lah. Then bila dah hantar barang semua, invoicing lepas accounting department terima invoice daripada invoicing department, dia akan minta untuk customer jelaskan dia akan minta customer untuk jelaskan bayaran tertunggak lah. Kalau sekiranya customer tu dah bayar advance ataupun deposit kepada company, dan dia akan minta balance tu lah. Sementara tu dia akan accounting department akan record lah sales journal, dan juga dia akan debitkan balik account receivable. Sekiranya customer tu dah bayar, dia akan update balik lah dalam accounting book dia.
So today I want to explain to you guys about test of control. Okay, what is test of control? Test of control is the activity that will be performed by the auditor to ensure the sustainability of the design of the accounting and the effectiveness operation of the system throughout the period ahead. Tests of control are performed in the following situation. Because auditors satisfied that there are indications of effective internal control based on the result of preliminary assessment of internal control. The second is availability of resources like staff, and the third one is apply time to complete of test of control. The principle of test of control is as follows: is first, the auditor will observe, meaning observation. Second, inquiry. Third, inspection of document, and the last one is performance. This principle will be explained in the next slide. Thank you.
For the contents of the audit program, there will be test controls for sales transaction and also test controls for cash receipt transaction. There are 7 methods for test controls for sales transaction that we can go through with, which is 1. Sales invoice. We can ask whether the sales invoice independently match with sales order and shipping document related. Second is monthly statement, which is prepared by a financial institution, which lists all credit card transactions for an account including purchases, payment, fees from the customer. And we can get the third party evidence which from the customer in order to examine whether it's tally with the files or not. Third is sales journal. From the sales journal, we need to choose from the 4 representative, which is customer order, sales order, bill of lading, sales invoices. We need to get 4 representative from each of them, and then we can check whether we can vouch it whether it's tally or not. For number 4 is pre-numbered sales invoices and shipping documents. We can ask and observe and inspect evidence that numerical sequence has been accounted for, such as like in the document there will be like an initial for the document and the shipping document, so we can check whether it's tally or not. Number 5, there will be shipping documents. We need to audit, which we can select representative from those 4, which is vouch to sales invoices, trace to entries in the sales journal, trace to posting to account receivable ledger, and compare to sales orders. For number 6, we have sales journal entry. We also need to select representative from those choices, whether it's vouch prices to approve price list, whether it's increase without approval or not, vouch to shipping documents, whether the initial or whether it's really shipped to the right place or at the right time. We can also vouch to we can recalculate to check for arithmetical accuracy.
For number 7, there are credit notes. We can inspect for authorization. Then also you can check arithmetical accuracy of prices, extension, and footing. Such as for footing, whether they really operate the business on the business plan, or whether they just use the credit notes just for more funding. Also, we can vouch posting to customer accounts in subsidiary receivable ledger.
There are 5 test controls for cash receipt transaction. So first is inspect evidence of independent bank reconciliation. So by inspecting means that they check each withdrawal, check or deposit, see if it's recorded on the bank statement or not. Or they can also watch for the odd transaction happen in the bank reconciliation. For the second one is review procedures for segregation of entities. In doing so, they can see whether for the mailroom and cash handling procedures, they can see whether it's effective or not, whether the company give the most effective way in handling the cash procedures. For the third one is inspect evidence, whether the entries in cash receipt journal are compared with daily cash summaries and are posted to subsidiaries receivable ledger. So they need to go through with the cash receipt journal and see and compare it, whether they are in the subsidiary receivable ledger, whether it's tally or not. It's something like that. Number 4 is cash receipts. For this sample, you can choose between these two samples, which is either to vouch to validated bank deposit slips. Deposit slips mean the receipt issued by your bank to its depositor. Also, you can choose to vouch to pre-list and remittance advisors. Pre-list is a list prepared when cash is received to verify whether cash receipt recorded at correct amounts and on time. And remittance advice is a letter sent to supplier to inform the invoice has been paid. So you can choose between these two samples. For number 5, daily cash summaries, you can choose to trace entries in cash receipt journal or recalculate to check for arithmetical accuracy, trace posting to general ledger, and also trace to bank statement.
Review of preliminary of control risk. The purpose is to evaluate the effectiveness of the design and operation of the internal control structure, policies, and procedure, which in turn enable the auditor to determine the assessed level of control risk for revenue and receipt cycle assertion. If the evaluation of deviation from prescribed controls based on tests of control for the sales and cash receipt transaction reveals that such deviation arise as a result of control failure, the auditor may conclude that less reliance than planned may be placed on specific internal control. As a result, the assessed level of control risk should be increased for those financial report assertions to which they relate, and the auditor would then modify the nature, timing, and extent of planned substantive procedure to be performed. Next is substantive test. Substantive test is an audit procedure that examines the financial statement and supporting documentation to see if they contain errors. These tests are needed as evidence to support the assertion that the financial record of an entity are complete, valid, and accurate. There are 8 common audit procedures under substantive tests, such as inspection of documents, physical inspection, observation, inquiry,
confirmation, reperformance, recalculation, and analytical procedure. There are three types of substantive tests, such as test of detailed transaction, test of detailed balance, and analytical procedure. Test of detailed transaction is a test for error or fraud in individual transaction. Substantive tests of transaction emphasize the verification of transaction record in journals and then posted in the general ledger. Test of detailed balance is a test of detail of account balance focused on the item that are contained in the financial statement, account balance, and disclosure. Test of details of balance consider the closing balance in the general ledger. The example for test of detail of transaction and balance are sales, credit notes, and allowance for doubtful debt. The last type of substantive test is analytical procedure. The objective of using analytical procedure in this phase is to increase the auditor understanding of the client and identify specific audit risks by considering unusual or unexpected balance or relationship in aggregate data. The example for analytical procedure are sales versus cost of sale, sales versus commission, and sales discount.
Okay, first is substantive test for sales transaction. Okay, there are 6 things to do. Number 1 is select a sample of individual entries in the sales journal and vouch to source documents. And then number 2 is select a sample of shipping documents, which are 3 things. Number 1, vouch to sales invoice. Next, trace to entries in sales journal, and then trace postings to subsidiary receivables ledger. Okay, next is auditor need to perform year-end sales cut-off test, and then verify arithmetical accuracy of sales invoice and sales journal. So this will avoid error in the sales journal. And then they need to scan the sales journals for large or unusual items. And the last one is perform analytical review procedures. Okay, so auditor need to do a final review. Next is substantive test for accounts receivable. Okay, there are 7 things to do. First thing first, auditor needs to confirm accounts receivable, and then they need to obtain an age trial balance of account receivable. So there are 3 things, which are: first is verify the arithmetical accuracy of subsidiary ledger accounts and agree total to general ledger control. And then examine the aging of account receivable balance. And the last one is trace posting to subsidiary receivables ledger. Number 3, auditors need to perform sales cut-off test. So usually sales cut-off test ni maksud dia adalah recognize revenue based on the date on which the sales invoice are generated. Okay. Next is examine subsequent collection, and then scan individual accounts receivable for unusual transactions, and then auditors need to review minutes of board of directors meeting and read contracts and agreements for any accounts breach. And the last one is perform analytical procedures. So there are 4 steps in the substantive analytical procedures. Number 1 is develop an independent expectation. Number 2, define a significant difference. Number 3, compute difference. And the last one is investigate significant differences and draw conclusion. Okay, now let's go through for the letter of positive accounts receivable confirmation request. Okay, the purpose of this letter is to inform our account receivable about their outstanding balance. So in the right box, we need to write our company name and our address. And then in the blue box, we need to write our account receivable name and address. And then at the right, we need to insert a date. And then we need to write about their outstanding balance based on our record. So when the account receivable is agree with the record, they need to contact our auditor. So they need to contact at the purple box, which we write our auditor's name and address. But if account receivable not agree, they need to tell the auditor about their record, and then we need to sign by the company. So that's all about our subtopic. Next, we go through for the final examination question.
Past year June 2018, question 5, part B. There are 3 things that the question wants us to do. This first one is to discuss any 5 major weakness in the above internal control system. The second one is to explain the possible effect for each weakness identified above. And the last one is to suggest a recommendation to overcome each weakness noted above. This is the answer for question June 2018, question 5 part B. It will be using a table with 3 columns. The first column is for weakness, the second one is for possible effect, and the last one for the recommendation. The first weakness from the question is the sales order and sale invoice are not serially numbered. The possible effect from this weakness is the missing sales orders and invoice might not be detected, resulting in non-recording of transaction. And to solve this problem, the sales order and the invoice should be pre-numbered and accounted. The second weakness is there is no authorization for the sale order and the sale invoice. The possible effect from this weakness is that the service crew might be recording a VCT tours sales order ataupun sales order yang direka, or errors in particulars of sales invoice might not be detected. So in order to solve this weakness is the sales order and sales invoice should be approved by a responsible person, such as managers. The third weakness is that there is no acknowledgement by the customers when the rider delivers the goods. The customer might deny receiving of the pizza, or the pizza order might be delivered to a wrong customer. To solve this is an acknowledgement of receipt of pizza should be obtained from the customer by signing the delivery document. The fourth weakness is the cashier did not count the cash received from the riders before entering the cash receipt information into the computer system. The effect from this weakness is that the pizza rider might misappropriate the monies, and the cashier has to bear all the consequences of any shortage. To avoid this problem, the cashier should count the cash received before keying the information into the system. The last weakness is that there is no segregation of duties between handling cash, recording, and reconciliation function. The possible effect from the weakness is the cashier might misappropriate the collection by manipulating the account records and documents. So, to make sure that this problem will not happen, there should be a segregation of duties between handling the cash, recording, and the reconciliation function. What can we learn from this slide? Firstly, we learn about how to understand the internal control structures of a company. What is the company sales and collection cycles? What is the company sales and collection activities? What is the document that should involve in the transaction? And what is the internal control objective of the company? Then, we also learn about the preliminary assessment of control risks and the review of the preliminary assessment of control risks. Lastly, we learn about test control and substantive tests that are used by an auditor to ensure that the internal control procedures are effective as to both their design and operation. All in all, the reason why an auditor needs to test control in cash and collection cycle is to determine how strong and reliable they are. If it is strong, the auditor can reduce the amount of transaction testing to do, and if error is detected, the auditor needs to increase the amount of transaction testing to detect why and where the error came from. That's all from us. Thank you.